Hello, this is Helaluddin Ahmed, Faculty of World School of Business, and this video will demonstrate to you the different theoretical aspects of departmental accounts. If a business consists of several independent activities or is divided into several departments for carrying on separate functions, its management is usually interested in finding out the working results of each department to ascertain their relative efficiencies. This can be made possible only if departmental accounts are prepared. Departmental accounts are of great help and assistance to the managements as they provide necessary information for controlling the business for more intelligently and effectively. It is also helpful in readily identifying all types of wastages, for example, wastage of material or of money. Also, attention is drawn to inadequacies or inefficiencies in the working of departments or units into which the business may be divided. There are some advantages of departmental accounting. The first advantage is evaluation of performance. The performance of each department can be evaluated separately on the basis of trading result. An endeavor may be made to push up the sales of that department which is earning maximum profit. Another advantage, the growth potential of the department as compared to other can be evaluated. And also it helps the management to determine the justification of capital outlay in each department. Departmental accounting also helps to calculate stock turnover ratio of each department separately, and thus the efficiency of each department can be revealed. And finally, availability of separate cost and profit figures for each department facilitates better control. Thus, effective planning and control can be achieved on the basis of departmental accounting information. Basically, an organization usually divides the work in various departments, which is done on the principle of division of labor. Each department prepares its separate accounts to judge its individual performance. This can improve efficiency of each and every department of the organization. Let's talk about the methods of departmental accounting. There are two methods of keeping departmental accounts. The first method followed when accounts of all departments are kept in one book only. In this method, it will be necessary first for the income and expenditure of department to be separately recorded in subsidiary books and then for them to be accumulated under separate heads in a ledger or ledgers. This may be done by having columnar subsidiary books and columnar ledger. Another method will follow when separate set of books are kept for each department. A separate set of books may be kept for each department, including complete stock accounts of goods received from or transferred to other departments or as also sales. Nevertheless, even when separate sets of books are maintained for different departments, it will also be necessary to devise a basis for allocation of common expenses among the different departments. If any organization is interested in determining the separate departmental net profit in addition to the gross profit. Expense should be allocated among different departments on the rational basis while preparing departmental accounts. Expense incurred especially for a particular department are charged directly thereto, like insurance charges of stock held by the department will be categorized as individual identifiable expenses. And common expenses, the benefit of which is shared by all the departments and which are capable of precise allocation, are distributed among the departments concerned on some equitable basis considered suitable in the circumstances of the case. There are two types of departments, dependent and independent departments. Departments which work independently of each other and have negligible interdepartment transfer are called independent departments. And departments which transfer goods from one department to another department for further processing are called dependent departments. Here, the output of one department becomes the input for other department. This transfer may be done at cost or some pre-decided selling price. The price at which this is done is known as transfer price. In these departments, unloading is required if the transfer price is having a profit element. And that's all for now. Thank you.